Hello, my name is Maria Bezubova and you're at my channel Fertilizers Jazz. Here we talk about events, trends, technologies in the world of fertilizers and agriculture. Please subscribe to the channel, put like to this video, and let's jazz. Today is March 24 and this is a weekly markets update. Let's have a look at the news of week 12 and see what are the next trends. Please check out my interview with Tamira Scatelli, founder of Hoodie Consulting and co-founder of Women in Fertilizer Brazil, that was published on Wednesday last week. Tamira shared her expectations of Brazilian fertilizers market in 2025, so don't miss the jazz. Urea market continued to be in limbo last week, and prices dropped further across the globe by $15 to $20, depending on the benchmark. Buyers in key markets stepped out, waiting for the market direction clarification, so the demand that was already slow became even more sluggish. At the same time, Indian tender still hasn't emerged. However, IPL was cleared. Egyptian product price decreased to $380 to $90 FOB, and even at this level, European buyers are not interested to purchase. Still, there is expectation that second wave of application and thus purchasing will happen at the beginning of April, which will support prices for this short period of time. Dangote in Nigeria announced 2 sales tenders for 30,000 tons product each last week, closing today. The plant was out of operations due to gas issues 2 weeks in March, but in April the availability will be there. Last week, a vessel from Dangote discharged in Turkey. Demand there was on youth, also taking into account lira's significant drop amid political tensions. Activity in the Black Sea is still absent. Spot prices in the Middle East decreased by $15 to $375, $385 FOB. But no fresh sales emerged. Most of the producers are comfortable for March, but open for sales in April. In Iran, all producers are back on stream, but there were no sales tenders due to Nowruz holidays. This week, perhaps, we will see a new actual price level from there. In terms of production, market anticipates full capacity from Iran to be available in about 2 weeks max. Russian producers in Baltics decreased FOB price by $20, but it didn't help with sales either to Latin America or Europe amid sluggish demand. In Indonesia, Pusri closed a sales tender for a small amount of prills at low $390 FOB level, which is far away from its initial target of $415. Demand in Australia remains slow due to dry weather persisting, as well as farmers waiting for further downward price correction in the international market. In the US, prices also softened in line with international trend. Domestic buyers continue to delay purchases, which starts jeopardizing the whole season, as per comments of certain market players. Paper values continued slipping across the benchmarks. Egypt FOB future price remained unchanged at $415 average for March, but lost $15 for April and $8 for May. NOLA value marginally corrected downwards for March and April, and increased by $8 for May. This one is interesting because it is a first indication that US indeed will need to prolong its purchasing window for May this year in order to be able to import all tons needed. Arab Gulf FOB future price decreased by $5 for March and May and by another $10 for April. Brazil CFR also dropped by $5 for March and 2 months ahead. In ammonium sulfate market, bearish sentiment continued spurring amid softening of urea price as well as sluggish demand. In China, standard grade AMSUL corrected downwards by $2 versus last week, and the low end is now evaluated as low as $138 FOB. Compacted product price dropped by $5 to the level of $150 to $55 FOB. There were no major sales or tenders announced last week. Some Chinese suppliers have pre-sold Q2 and even partially Q3 cargoes, totaling as much as 1.2 million tons. In the Southeast Asia, prices are under severe pressure after Thailand TCCC and Philippine Atlas tenders resulted in China netback levels even lower than I just mentioned. So the demand is there, but producers are not happy with the price level at all. Activity in Europe and the US markets was subdued. The nitrates demand continued slowing down in Europe as farmers are busy with on-field application. Also, buying is being deferred in the hope that prices may come down, given the falling urea values. But gas prices have gone up again slightly, so there is some amount of uncertainty now in the market, keeping buyers at bay. In Germany, CAL sales were at around €365 last week, so prices have come down, but just slightly. In Ireland, distributors are very busy with deliveries. Wholesale prices are stable, but factories are under pressure trying to keep supply up. In the UK, there is a massive logistical challenge that has come up due to lack of trucks in some regions, led mostly by lack of truck drivers. Also because of late buying by farmers, so distributors are under tremendous pressure to make deliveries. Market players hope that demand will resume in a week or so. No new prices announced by European producers, so general expectation is that producers will take a pause. In Turkey, CAN application season has started. Sales are good in the domestic market, and there is also demand for exports, although some players are waiting to see if the fall in urea will also impact nitrates. Producers have availability for shipment only from second half of April. CAN in the domestic market continues to be priced at around $300 FCA equivalent. UAN prices in Europe increased amid tight supply and despite urea and nitrates price drop. However, the demand is only for small batches because market is well covered and the season is moving to its end. In the US, prices also increased on the back of supply issues. Koch plant remains down and rumors circulate that it might last for more than 30 days. Other producers say to be committed until late spring. Thus, CF Industries increased its price by $10 at the end of last week. The situation is expected to continue, so UAN affordability will be struggling. In ammonia market, the bearish sentiment persists, but prices stabilized mostly at the level of previous week. The key news of the week was that Yara vessel is heading to US Gulf, and market participants expect that long-awaited Gulf Coast Ammonia facility will finally come on stream, and exports will start. If this is the case, then there is high probability that April price will be agreed between Yara and Mosaic at even lower level versus March. That was already low. US export activity was healthy last week despite domestic season starting. Prices remain stable to soft and will be driven down more if April Tampa deal is going to be lower than March. Domestic US prices also remain mostly steady, except Midwest, where CF Industries increased price by $10. Activity in the Middle East remains subdued, with prices hovering around $300 FOB level. Rumors circulate that one of the Saudi producers will close one of its ammonia lines for maintenance sometime in Q2, but there is no confirmation at the moment. Of course, if it happens, it will help to stabilize this balance between demand and supply in the region to a certain extent. In India, FACT issued a purchase tender for two 8,000 tons cargoes. Previously, FACT scrapped its purchase tender for the same amount, which closed on March 17. On top of that, there is information circulating that East Coast buyer, most likely IFFCO, is linked to the purchase of 13 to 14,000 tons cargo of Bangladeshi origin at the level as low as $311 CFR for the first half April shipment. Obviously, this price level indicates bearish sentiment continues spurring the market. In northwestern Europe, import activity remained quite good. However, price level was undisclosed. In Algeria, nominal price stayed at $500 FOB level, but no deals were registered. In Turkey, Russian producers are heard to aggressively drop prices to Mediterranean cargoes. Level rumored is $410 CFR, but there were no concrete deals confirmed last week. No price movement or spot deals have been heard this week so far. Phosphates market remains bullish amid continuing global supply limitations. There is no sign of China coming back to export market. There were no comments about that done at Chinese Phosphate Association conference last week, which adds to the bullish sentiment, of course. Rumors circulate that Chinese producers are revising expectations for exports due to sulfur prices. It is possible the government could limit DAP-MAP exports to control demand for sulfur. So now market expects China to be back not earlier than second half May or later, and prices for Q2 will be stronger than expected. MAP price in Brazil continued building up last week, reaching $650 to $60 CFR with further growth anticipated, and also pulling up TSP price. Such level increases affordability concerns, and buyers are trying to look for alternative phosphate sources, like TSP or SSP, first of all, to substitute insanely high MAP. Martin confirmed sales of 45,000 tons of combined DAP and MAP cargo to Argentina and Uruguay at $670 CFR level. OCP and the Indian government haven't reached agreement for the long-term supply until now, and some market sources say that the deal is dead. OCP reported sales of 50,000 TSP for April to India at $470 to $75 CFR, and also 50,000 tons of DAP at $655 to $60 CFR. So for now, spot relationship will continue. Apart from that, RCF at its latest tender awarded triple 15 to Chase Max at $398 CFR, NPS to Hexagon at $407 CFR, and 20,000 tons of MAP also to Hexagon at $649 CFR for April shipment. But in general, Indian government doesn't clarify playing rules for importers for 2025, leaving the market in kind of limbo. Situation at NOLA was stable, no activity registered, and thus prices remained mostly unchanged. Moving to the fundamentals. European natural gas futures jumped to 44 euros per megawatt hour in the middle of last week, as ongoing attacks on energy infrastructure in Russia and Ukraine further reduced the chances of Russian gas flows resuming. On Friday, the price reverted to the level of last week and perhaps will go down more, as, apart from geopolitical factors, there are no other grounds for the price to stay elevated. Warmth arrived to the vast majority of European countries, so heating season is coming to its end. However, Europe faces a challenging storage buildup ahead of next winter. Currently, gas reserves are only 34% full, with a 90% target still set for November 1. US natural gas futures dropped lower than $4 per MMBtu, the lowest in 3 weeks, after a report about a larger than expected inventory build. US utilities added 9 billion cubic feet to storage the week ending March 14, which marks the first stock increase since November 2024, narrowing the storage deficit. Meanwhile, LNG exports hit a record in March, as already mentioned a week ago. Looking ahead, temperatures are expected to stay near seasonal averages through early April, so heating demand will be limited. Agricultural commodities future prices restored after a significant decrease at the beginning of last week. Wheat futures hovered at levels similar to last week, as weekly export sales data and a stronger dollar raised concerns about US wheat export prospects. Analysts attributed the poor export performance to strong global wheat supplies. Meanwhile, the dollar index rose further after the Federal Reserve signaled no immediate plans for rate cuts, making US commodities more expensive in global markets. Weather conditions, including rain and snow over US winter wheat growing regions, have helped elevate dryness, but added pressure to prices. Traders are also positioning ahead of the USDA's grain stocks and planting report on March 31, which will provide insight into 2025 planting intentions. Corn futures increased to $4.68 per bushel. However, trade looking for lower 25 corn prices if US farmers indeed plant 94 million corn acres versus less than 91 last year, and summer weather is normal. For now, South Brazil remains dry, as well as US Northwest and Midwest. Traders are cautiously awaiting the USDA's prospective planting report. In speculative activity, managed money significantly reduced their net long positions in corn. Export sales continued to impress, however, with 52 million metric tons committed so far this year, up 25% from the same point last year and ahead of the USDA's expected pace. Also important to note that EU imposed 25% tariffs on US corn in the continuing tariff war. So let's see how the situation develops. Soybean futures hovered again around $10 per bushel, down nearly 15% compared to last year, with global soybean stocks expected to reach record highs. The USDA recently lowered its 24-25 global soybean stock projections, which still represents an 80% increase from last year. It marks a significant reduction from earlier projections of a 20% rise due to smaller crop sizes and increased demand. On the demand side, China is poised to import a record 31.3 million metric tons of soybeans in Q2 25, helping to ease supply pressure from smaller arrivals in March. However, Beijing retaliated against new US tariffs by raising duties on a number of agricultural products, including soybeans. Moving to the shipping industry. Containerized freight index lost another 4% during last week. The situation is the same since beginning of the year. Price decreased for all key destinations, with sharpest drop for destination from China to the US ports. Market analysts foresee more price deterioration in upcoming weeks. The Baltic Exchange Dry Index remained on the same level versus a week ago. In the Capesize, market lost momentum and slightly dropped, as miners remained absent from the market for various reasons for a few days within the week. For Panamax segment, it was a week of slow erosion, mostly due to lack of demand in North Atlantic. In Ultra-Supramax segment, positive gains were observed across geographies, with demand sparkling here and there. In Handysize, the market saw minimum visible activity across both basins. Also worth mentioning that USA started attacks at Houthis in the Red Sea in order to prevent them from further disruptions of Suez Canal passage. However, for now, these attacks haven't resulted in solid agreement. Hopefully, it will follow sometime soon. One more topic that I'm closely monitoring is penalties for Chinese vessels entering US ports. Seems like this regulation already started impacting fertilizers trade. Last week, several vessels, mostly with urea, were diverted to Brazil, and more will come. For now, it is difficult to estimate the real effect of this measure, but it will be huge, most likely. Also, we should take into account agricultural exports from US. That will be severely hit, and world trade should expect price increase because of this factor. Let's further watch development of this topic as well. To sum up, urea market almost lost hope that Indian tender will emerge and support slipping prices. In the meantime, buyers in all markets stepped out, waiting for additional downward correction. Demand will spur in a week or two from Europe and US, but how much it will support the price trend is a million-dollar question. Nitrates prices in Europe also decreased on the back of softening urea and also due to finalization of application season. Sulfate prices also dropped last week amid slow demand and general nitrogen downward trend. Ammonia supply from the long-awaited Gulf Coast Ammonia plant seems to finally start, which most likely will weigh more on the contract price in Tampa for April. Meanwhile, demand in East of Suez continued to be slow, thus prices hovered at the lowest level in months. Phosphates prices remained elevated and even increasing, on the contrary of situation in nitrogen segment. This was a result of tightening supply, as well as continuous growth of sulfur cost. European gas price jumped due to attacks at gas infrastructure in the war of Russia against Ukraine. In the US, gas price decreased amid healthy production levels and warm weather. Agricultural commodities future prices fluctuated around similar levels versus a week ago. Only corn price demonstrated some gains. Container shipping costs continued slipping, And activity in bulk shipping was relatively good, which supported prices at the level similar to a week ago. So let's see what is next around the corner. But it will be already next week. Thank you for watching. Please subscribe to the channel, put like to this video, push the bell in order not to miss any updates, and see you soon.